Hey everybody! Recently Vsalt had an expert panel discussion on faster payment strategy, and we brought in experts from all around the industry to share their thoughts on what it takes to create a faster payment strategy. The first thing we asked them was, where do you start? Then we asked them to share some of the lessons they have learned from implementing faster payments. What did they have to say? Let's go to the panel discussion and hear what an expert on global payments had to say.
One of the key things, I think, is to take a very strategic view, which is to say, look, I began, my initial comment was really about, what do I want to be when I grow up, right? But I think that what we're saying in the payments industry and in the financial services industry as a whole is, and this is going to sound like a management consultant talking to you for a moment, so bear with me, I'll get us there, right? Okay, is the fragmentation of the value chain, the fragmentation of the vertical integration of the industry. That nobody would tolerate it, right? If you look at other parts of the financial services industry, if you were to go to a financial advisor, right, and they would only offer you mutual funds from a single management company, or they would only offer you financial products from a single company, you wouldn't stand for it, right? If you were to only go to an insurance broker and they were only offering you insurance from a single insurance company, you wouldn't stand for it. But yet when it comes to payments, that's exactly what we expect, right? In fact, we go to our bank and we go to our financial institution and we expect, okay, that they're only going to offer us their own payment products. Well, that is already beginning to fragment insofar as we're seeing some financial institutions focusing on the production, okay, of payment services, and others that are focusing on the distribution of payment services. In fact, when you look at the way in which this is a development that's been going on for decades, we're just renaming it now and describing it a little bit differently. When you look at the way in which many smaller financial institutions have to rely upon core processors for those basic products, right? Okay, they in effect are simply becoming distribution channels for that back office that they've outsourced to someone else anyway. But we're seeing that increase with the likes of neobanks, with the likes of online-only banks that then completely outsource all the back office, and all they do is they've got a nice-looking front end that's facing the consumer. So, to get back to your question, what is it what are some of the key considerations? Well, I think that a financial institution has to consider, what is my future digital strategy? What is my overall business strategy? What is it that actually I want to be? Do I want to be a repository for my customers' money, right? Which they then can access via other channels, or do I want to be the customer-facing side of it, or do I want to do both, right? Very few institutions will succeed at doing both. Many more will tend to focus in one way or the other. And I would argue that for the smaller banks, they're probably much better off focusing on the customer relationships, right? And allowing the back office stuff to be done by those that can do it in a more scalable and in a more cost-efficient manner. Larger institutions might be able to manage both. So when I look at what's happened, right? One other thing that we see in doing that is the degree of, and what's determined the degree of adoption in many countries has been about the level of coordination. Now, I also think that it's, what's the right word? I think it's far-fetched to think that the 10,000 plus financial institutions in the US are going to come together with a national faster payments strategy, right? Nor do I think the Justice Department would allow it if the banks to somehow, if the financial institutions decided that they wanted to do it, okay? However, where we've seen that in other countries, we've seen adoption really take off. I think the more likely scenario, right, is, what we're seeing in the US is this fragmentation. We have multiple rails, we have multiple strategies, we have multiple ways of going about doing this. And, chaos can sometimes be a really beautiful thing too. So, the question is, what have we learned from other countries? We've learned lots of things. Some of them are applicable, some of them are not.
I like the chaos comment there. That's great too. And I'm going to quickly create some chaos in this. I got a quick question.
So I want to interrupt with one final comment. So I said the beautiful chaos. I'd say in chaos, though, lies opportunity. If things are orderly, right, then everybody has the same opportunities, right? That's not good, right? Chaos is wonderful in that respect.
Take a strategic view. The fragmentation of vertical integration in the value chain. If you went to a financial advisor who only offered you one product from one company, you wouldn't stand for it. So why would you expect the same from your financial institution? Love that comment. And there were more views shared from other experts. And if you'd like to hear and see what the other experts had to say, or maybe see the entire webinar on the faster payment strategy, then head over to paymentsprofessor.com. I'll put a link to the webinar in the description to help. For now, class dismissed.